Hello traders, this is UC Ethics. Welcome back to another wonderful video. This channel is all about helping new and struggling traders to become acquainted with the necessary information and knowledge to be profitable in the forex market, even advanced traders as well to become more profitable in the forex market. So support us on this wonderful journey by clicking on the red subscribe button and the bell notification icon to be among the first that will see our videos whenever we upload them. Thanks for doing that. And always remember to drop any topics that you would like us to make videos on in the comment section. We really want to connect with you to help in any way we can. So without further ado, let's go into what we have for today. Yes, how to trade order blocks. If you don't know what an order block is, I recommend you check out the video on what order blocks are with the link in the description below. And if you have always wanted to learn smart money concepts, the links to the videos are as well in the description below. It has 5 episodes. I typically organize it from A to Z. Unlike other YouTube videos, you can't easily find videos teaching it in an orderly way. So back to the topic for today. I'm going to be explaining step by step on how to trade order blocks. So step number 1 to trading order blocks is directional bias. So step number 1 is directional bias. So you need to understand what direction price is going to take. How do you do this? You need to go to the higher time frames, that is the daily, weekly, and the monthly charts. You need to build a story from the information the higher time frames gives you. So you need to ask yourself, where is price coming from? Where is price going to? So is price coming from a discount level or going to a discount level? So you need to understand if you're actually in an uptrend or in a downtrend or the market is actually consolidating. So after understanding this, you mark out your charts with the information you received. So let's assume you've read your daily and you understood that the weekly, the monthly, daily charts are showing bullish trend. So let's assume we have a bullish trend. Let's assume we have a bullish trend. So after understanding this, knowing the trend of the market, this leads us to the next step. So, this leads us to the next step, which is order blocks. So order blocks. So yeah, you need to mark out your order blocks from especially the higher time frames, because order blocks on higher time frames are more effective. So after marking that out, you need to go over. Then we go over to the next step. So, but here in this sketch that I have, let's assume we have our order block right here. Let's assume there is another block inside this area. So then we go over to the next step, which is a break of structure. So the third step, break of structure. Just like we have here, after marking out your order block, you need to make sure that there is a break of structure after the formation of that order block. So looking at this sketch, we had a break of structure here. So we had a break of structure. We mark it out as, actually we call it a BOS. So that's your BOS. Then this is actually your OB, order block. So that's your OB. So you need to see a break of structure, just like I said, after marking out your order block. Then you wait for price to come back to this order block after this break of structure. So then this leads us to the next step, which is liquidity. So liquidity is basically the way institutional traders induce less informed traders on taking wrong positions. Yeah. So when the institution wants to sell, they induce less informed traders to buy and thereby taking them out. So before price returns to your order block, this order block, you need to spot liquidity. So it comes in the form of equal highs, equal lows, and trend lines. So before we go over to the next step, let me actually explain this. So let's assume price did something like this. So let's assume price did something like this. Price comes into this area, drops into this area, goes back up. You would agree with me that most traders would be going long when they see price come back into this area, because most breakout traders will think that, oh, this is actually a breakout to buy inside this area. So what price will actually do is go up a little bit, come back down. So here inside this area, smart money will be waiting for traders that will be going long to take them out. So price will touch this area for the last time, then it will finally take it out. So this is what we actually call liquidity. So this is what we actually call liquidity. So here in this area, we have liquidity in form of equal lows. So liquidity was actually grabbed because less informed trader thought that, oh, market is actually going to, move up from this this area after breaking this structure, but not knowing that this area is actually liquidity used by the smart money traders. So we then go over to the next step. But first of all, we need to mark that out as our liquidity. So we need to mark it out as equal lows, or equal lows. So here we have our liquidity in form of equal lows. So if it's actually a bearish order block, it will come in form of equal highs. But here we have equal lows. So let us move to the next step. So the next step is discount levels. So the next step is discount levels. So yeah, you need to sell or buy at discount levels because that's where smart money sell or buy from. So this applies as well in real life. We enjoy buying things in discount prices. So you need to make sure price is at discount levels. And we have our discount levels as 0.18 and 0.786 of the Fibonacci tool. So let me show you that. So but anything below or anything, and 0.5 is actually equilibrium, and then anything below 0.5 is called premium price. So you will take your Fibonacci tool, drag it from this place, from your order block to these highs. So you need to make sure that price is at discount level before you start taking your entries. So here we have a 0.618 and 0.786. So you need to allow price to get into this area before you start taking your entries. So after that, we then go over to the last but not the least. So but the last but not the least is actually uh lower time frame confirmation and entries. So lower time frame confirmation and entries. So after price must have taken out liquidity and you spotted price at discount level. So this is where you actually need to get interested in buying or selling. So you will wait to see price tap into this area, the point of interest. So after tapping into this area, you need to spot a lower time frame order block formation. So let's assume we had this order block on our 4-hour chart. So we need to spot formation of order block as well inside this area on 15 minutes time frame. So and you would mark out the order block, the 15 minutes time frame order block. So you would as well wait for break of structure, just like we saw here. Wait for break of structure, wait for liquidity in form of equal lows, and a tap into the order block. So we're just basically repeating what we actually marked out on the higher time frame. So just like I normally say on this channel, the market is actually fractal. So you wait for the exact same thing that you saw or you marked out on higher time frame to happen as well on your lower time frame. So if you're using the H4 time frame, your entries should be on 15 minutes time frame. If you're using the H1, your entries should be on 5 minutes and 1 minute time frame. Then on the daily, your lower time frame confirmation chart should be on H4 and H1. So here let's assume we are using H4 order block. So you need to as well wait for price to tap into this area, form another order block in your 15 minutes time frame, wait for that same lower time frame break of structure, just like we have here, wait for another liquidity formation, grab and tap into a discount level and order block formed in that 15 minutes time frame. So let me actually show you that here. So let's assume we zoom into our 15 minutes time frame. So you need to see price do something like this, tap into this discount price. So you need to wait for a formation of order block, so which is actually identified with a break of structure. So with that, you wait for price to tap in this into this area, break this lower time frame structure, then come back, give you equal lows, just like liquidity, just like you saw here, just like liquidity. So you as well wait for that liquidity to be grabbed, and you as well wait for price to come back into discount levels with regards to the formation of this order block inside this place. So price would actually tap into that same order block and discount levels. Then this is where you would actually be taking your entries from to go long and continue the bullish trend. So I'll be explaining this on the real chart so that you can actually understand more of what I've been saying. So here we are on the real chart. This is AVD and ZD. So this is the monthly chart. Just like I said, you have to build a story from the monthly charts down to the lower time frames. So here we are on the monthly time frame, and as you can see, we had a break of structure right here. So and we are actually in a downtrend, actually in a bearish trend. So after price broke structure, you could spot an order block inside this area on the monthly time frame. So just like I said, you have to know where price is coming from and where price is about to go to. So right here we had a break of structure, and price is likely going back to mitigate this monthly order block. So here on the weekly we are turning bullish already. We had a break of structure right here. So weekly and daily is showing a bullish trend, but the overall trend of from the monthly is bearish, because you're about to go into this discount level to mitigate this order block. So let's scale down to having this information, let's scale down to the weekly and daily chart. So here on the weekly, we had a break of structure. So we had a break of structure right here. So weekly is turning bullish. Weekly and daily are turning bullish to go and mitigate this order block in the nearest future. So let's scale down to the daily chart. So here on the daily chart, we are bullish as well on the daily chart. So what do we need to do here? We need to find our order block. So here we are looking for bullish order blocks. Okay, so let's plot our order blocks. So before price broke this structure, you would agree with me that we had an order block inside this area. So we had another block inside this area. So as you can see, we had a last bullish candle, but we are supposed to mark out a last bearish candle before this upward movement. So in case you see stuff like this, you see a bullish candle before an impulsive move, you have to go down to the H4 time frame to refine this order block, because there is an order block inside this area. You have to go down to the lower time frames to refine this order block. Yes, so let's go down to lower time frame to refine this order block, because we have another block here which took out this high. So let's go down to the lower time frame. So here we are on the 4-hour chart. So here is this area. So we have to refine the order block using our H4 time frame. So here on the 4-hour time frame, we had this last bearish candle before this impulsive move. You see? So on the daily chart, it wasn't that clear. So in times you see or you open your chart and the order blocks are not clear, you have to go down to the lower time frames to refine your order block. So here we have exactly what we want. We have our bearish candle before this impulsive move. Remember, it has to be identified after an impulsive move. So here we have an impulsive move after the formation of this red candle. So we are going to be marking this out as our order block. So let's stretch that a little. So here we have our order block. So what next? As you can see, we had a break of structure after the formation of our order block. So we'll be marking that out as break of structure. So we had a break of structure. So BOS had a break of structure, and we have our H4 order block. We have our H4 order block. Then what next? And what next? After a break of structure, you will wait for price to return to your order block. Just like I said, before price returns to your order block, you need to see liquidity. So here we have liquidity in form of equal lows. As you can see, we have our liquidity. Just like I explained on the sketch, many traders will think that this is actually a breakout and retest. They will start going long inside this area. As you can see, they are all taken out. So this is exactly what we call liquidity. So you need to wait for liquidity. So we have liquidity here in form of equal lows. We have liquidity in form of equal lows. So after our liquidity, you need to check where price is. You need to make sure your price is at a discount level. So you have to grab your Fibonacci tool, take it from these lows, from the OB to the last highs. As you can see, price is sitting right at our discount level, which is the 0.18 and 0.786. So it's in between. So this is where we need to be interested in. So 0.5 is actually your premium price. You shouldn't be looking at that. So anything above this 0.5 is actually premium. So we are interested in discount prices, which are the 0.618 and 0.786 of the Fibonacci levels. So what next? We need to go down to the lower time frames to confirm our entries, because price is now at our discount level. So we're going to be using lower time frames. Here we have our H4 order block. So we're going to be using 15 minutes time frame to confirm our entries. So that leads us to the last row on the book. So let's go down to the 15 minutes time frame. Just like I said, down on the 15 minutes time frame, you need to as well mark out 15 minutes order block, break of structure, liquidity, and the tap into your 15 minutes order block. So let's do that right away. So let's go to our 15 minutes time frame. So here we are on our 15 minutes time frame. This is our equal lows, this is our H4 order block. So this is our price. So we need to spot a 15 minutes order block as well. So here on the 15 minute time frame, you would agree with me that we had a nice order block inside this area. So this is our last down candle before an impulsive move. So this is our 15 minutes time frame order block. So here we have our order block. What next? You need to see a break of structure. Here we have a 15 minutes break of structure. We as well had our 15 minutes break of structure right here. We're going to be marking that out as our break of structure. We have our break of structure. We have a break of structure. Then you have a M15 order block. Here is our order block. So we had break and break of structure. So what next? What are we looking for? We need to wait for a return to our order block. And before price does that, we need to see liquidity being grabbed. So here we have our liquidity in form of equal lows. You would agree with me that we have liquidity right here. So this is our liquidity in form of equal lows. So we have our liquidity right here. Now what next? We need to wait for price to take out this liquidity and tap into our discount levels. So we grab our Fibonacci 2, take it from these lows to these highs. As you can see, price nicely came into our discount level. As you can see, 0.618 and 0.786. So this is our discount level. So this is where you would be taking your entries from. So you're going to be grabbing our 2. So we're going to be taking our entries from here. The stop loss just slightly below this 15 minutes time frame order block. Slightly below. We're taking our entries right here. So, and on the H4 time frame, we're going to be targeting the next high for our take profit. We need to target the next highs for our take profit. So right here, we're going to be targeting this high for our next take profit. Why am I saying that? Because you likely have we have liquidity right here. So there might be a bearish order block here that price might jet from. So we want to be on the safe side. So we are targeting the next high for our take profit. So let's see how much risk to reward ratio we have on the trade. So here we are. So let's take our risk to reward ratio and know how much we would have got on this trade. So this is our take profit. So as you can see, this is a nice 1 to 8.5, almost 1 to 9. You're risking 14 pips, targeting how many pips? You're risking 14 pips and targeting 133 pips. That's a whole lot. So this is how you catch those sniper entries. Make sure to do your proper back testing to understand this properly. So we are going to be learning how to trade the bearish order block as well. So let's go over to the bearish order block to learn how to trade them as well. Just the opposite of this same thing, but we are going to learn it as well. So let's go and learn that as well. Just like I said, you will have to check the monthly time frame to actually know the directional bias of the market. So the number one step is actually directional bias of the market. So looking at this chart, you agree with me on the monthly that we are actually bullish because we had a break of structure here. So we had a break of structure here, and price is actually coming back to tap into this big order block. So which means on the weekly or on the daily time frame, we are in a short-term bearish movement. So price is actually heading to tap into this area, and we actually have a discount level, just like I said. So here price is actually going to a discount level. So you need to understand and build a story from what this higher time frame is saying. So on this one, the price is actually going to tap, or it's about to tap into a discount level. So we had a short-term bearish movement inside this area. So we could possibly anticipate that price will tap into this big order block before moving upwards in the future. So if you go down to the weekly or the daily time frame, we actually bearish on the daily time frame. So as you can see on the daily time frame, we actually bearish on the daily time frame. So let us mark out our order block, which is actually the next step. You need to mark out your order block. So right inside this area, we actually have a nice order block. So we have this order block inside this area. So this is actually a daily order block, a daily bearish order block. So here we're going to be using our H4 and H1 as our lower time frame confirmations. So after you must have marked out your order block, which is the last bullish candle before an impulsive move downwards. So this is our bearish order block. So you need to spot a break of structure, which is actually the third step. So here we had a break of structure. So you need to mark that out. So you need to mark it out as BOS. So this is our break of structure. Then as well, you need to spot where price is, or rather you need to check liquidity. So after break of structure, you need to wait for liquidity before price will tap into your order block. So this area is actually daily order block. So we have our daily OB. We have our daily OB inside this area. So you need to wait for liquidity before taking your trades from this order block. So let's go down to the H4 time frame. So here on the H4 time frame, this is our daily order block. This is our breakout structure. So we need to see liquidity before it tap into our order block. So here inside this area, you will agree with me that this is liquidity in form of equal highs. So we have equal highs as our liquidity. So we have equal highs as our liquidity. So after that, price, you need to check where price is at. You need to check for discount level. So we take a Fibonacci to take it from this area to this point. As you can see, price tapped nicely into our discount level, which is a 0.786 of the Fibonacci tool. So here we need to go down to the H1 time frame to confirm our entries. Remember, we need to spot the same thing that we actually saw on the higher time frame. We need to spot order block, breakout structure, liquidity, and the tap into that lower time frame or H1 order block. So let's go and do that. So let's go down to the H1 time frame. So here we are on H1 time frame. Just like I said, you can see price tapped into our order block, tapped into our discount price. So we need to spot out a lower time frame or H1 time frame order block. So you will agree with me that we have a nice order block here. So we have a nice order block here. So let's mark that out as well. So let's change the color to maybe white. Yeah. So after that, you need to mark out the H1 order block as H1 OB. So we have our H1 OB here. So remember, we need to wait for breakout structure. As you can see, we had a breakout structure here. So we marked it out as well. BOS. And after that, what next? You need to wait for liquidity before it tap into this H1 order block. As you can see, we have our lower time frame liquidity, which is in form of equal highs as well. So here we have our liquidity as equal highs. So we have our liquidity as equal highs. Then what next? You need to know where price is at. You take your Fibonacci tool, you mark it out from the H1 order block down to the last low. And as you can see, price came directly into our discount level, which is the 0.786 of the Fibonacci, which is here. So what next? This is where you actually take your entries. So you take your entries from this area, and as you can see, after this area, so you take your entries from this area, then you set your stop loss that exactly opposite the H1 time frame. So this is where you actually get your sniper entries. So you place your stop loss just slightly above the H1 time frame. Then you target all the way lower. So let's go back to the H4 and see how this actually worked out. So here on the H4 time frame, you need to be targeting these lows. So as you can see, price exactly went from our entry all the way down. So this is actually a zero drawdown. This is how you get your sniper entries. So this is actually a 1 to 7 risk to reward ratio. So I think this is actually well explained. Just do your back testing to understand more about this. So don't forget to drop any topics that you would like us to treat um, in the future. Drop it on this comment section, and don't forget to subscribe and like this video. So it actually encourages us to keep making more videos like this. So see you on the next video. Thank you.